All right, traders, the green streak continues. Today was the first day where I decided to not play put options on the SPY into this week. I actually ended up buying call options, and I bought the dip literally at the low of day on the SPY using the gap close reversal strategy. Within this video, I'm going to be teaching you the strategy step by step. It's a unique trend reversal strategy that's going to get you into the lows right before it starts to spike. I'm also going to be going over SPY's price action analysis on the day and giving you the newly updates on the SPY. This is going to help you a lot in terms of how to trade the best setups at the best prices with the unique price action analysis. So let's get right into it. So why did I decide to buy calls live on stream within Trader Society today, literally at the lows? The reason why is I'm going to give you a couple. So as I was saying in my video yesterday, I said SPY is at key support. And this is the first time that it tested this initial key support towards this 388 level, right? And it has nice upside potential. There was also a gap that was waiting to fill above at 391.49. So I clearly said puts at the previous closing price, which was 388.64, were not ideal to be buying puts. And I also had stated, based off of this daily candlestick right here, what I want you to do is look at this move right here. See how SPY has very nice two red days right here. And then on the third day, it forms this like trend reversal middle candlestick. And what does it do the next day? It explodes up to fill this gap. See how there's a gap to fill above right there? And it explodes up and it closes strong towards the highs. It did the same exact pattern. SPY has two nice red days right here. SPY has two red days right here. Look, I want you to compare this, man, because visually capturing patterns works. Look at this candle right here, look at this candle right here, and then look at this candle right here, look at this candle right here. You don't even need to know the names of the candlesticks. You just need to understand what they do at the key levels. Trend reversal candlestick, the previous closing price right here is the bottom. It shoots up to fill the gap above, and it closes strong at the highs. Trend reversal candlestick right here, it shoots up to fill the gap above, and it closes strong at the highs. Same exact pattern. Those were the reasons in terms of why I was against puts at the previous closing price. Plus, it was extremely micro oversold. Now, with that being said, I utilized that information heading into the market open. So what ended up happening was the SPY opened up higher than it previously closed. And in the pre-market, it kept forming support at the previous closing price. So this white line represents a gap that's waiting to fill above because SPY gapped up, it opened up higher than it previously closed, and it kept bouncing, it kept forming higher support, and it kept breaking out, trying to fill that gap that was waiting to fill above at 391.49, right? So if I disable extended hours, you'll be able to visually see that there's gaps to fill instead of using these white lines. But just so you can visually see it in more of a clear picture, you can visually see that it had a gap up, and as soon as it filled the gap, it formed a bullish candlestick on the 5-minute, which is one of the reasons why I decided to buy calls as soon as it started to fill the gap. Another reason is, and I would encourage you to go back and watch the previous video that I posted because it shows you exactly how I traded this live real time within Trader Society on stream. But in terms of the other confirmations I used, not only the 5-minute bullish candlestick, it was holding up in the pre-market, it already gapped up and was already breaking out, and it kept trying to fill the gap above. It was forming higher support compared to yesterday's support, all bullish reasons to be buying calls. And in terms of my confirmations on the 1-minute chart, I analyzed, okay, what is it doing at the previous closing price, right? So SPY had a gap up, it started breaking out, we had an overreaction to the downside at the open, and then it formed a floor. How can we tell if it's forming a floor? Well, look, you have this bullish trend reversal candlestick, that same bullish trend candlestick on the daily. Remember the one I showed you on the daily where SPY was going to start to rocket today? I mentioned that in yesterday's video. It formed at the gap. It was consolidating. It was holding bullish pins. Right here, it cracked the gap. As soon as it cracked the gap, the bulls came through and they formed a bullish pin and closed strong, right? So I bought into this bullish confirmation, and then I told people if it can break above this 389 level right here, you're going to want to add to calls, because if it can break above this resistance and form a floor like it did here, like it did here, like it did here, then it's really going to start to blast off to fill the gap that's waiting to fill above. And there was clearly a gap that was waiting to fill above at $391.49. So those are the reasons why I decided to buy calls and not play puts. As you know, I'm a quick scalper. I get in, I get out, I take my profits. I don't care that the calls that I sold for a 15% win are now up 500 to 600%. All you need is one simple strategy that works. That's all you need in this market. And then from there, what do? You perfect it and you compound your account. And you want to make sure that you're optimizing for the right thing with your strategy. You're trading the trend. You understand when key trend reversals can occur. You're trading the best setups at the best price. So that was the best setup at the best price. It was calls. And that's the one and only trade that I made today. And as I had stated in yesterday's video, we could potentially have a small reversal at 309.150. So if I see a strong bearish confirmation, I will look to play puts. I had also given out levels where it can have a small pullback at 393. It ended up having a small pullback at 392.50. That ended up working out just at a slightly lower level. And I also stated the best level for puts possible was at 396.50 to 397. Now, with that being said, in terms of the best setups at the best price, this was the gap close reversal strategy, and it worked on calls because it was oversold. But the gap close reversal strategy did not work at 391.49. It was too oversold, and there was no bearish confirmation. It literally had a breakout, and then it formed a floor at the previous closing price. All reasons to not play puts, and that's why I didn't play puts. Not only because of that, and it was oversold. The main reason today why I decided to not play puts was because SPY was oversold. I showed you the bullish candle on the daily, and this was the main reason. It had a gap close reversal strategy. It had a bullish gap close reversal on the long side. I do not bet against my strategy. Now, that's not to say that if it fills this gap, forms bearish resistance, and starts to have a reversal, that it can flip bearish. It can. It's just the issue is it already had a bullish reversal, and it's already so oversold for the micro. The put options printed absolutely crazy the past 2 days. It's at key support. There's a gap to fill above, and if it goes above this gap and forms support, which it did, it is going to continue to skyrocket. You cannot bet against the gap close reversal strategy. So I do understand, yes, there's a gap to fill, and if it reacts as a resistance, it can start to reverse. But the issue is it's extremely oversold. There was bullish candlesticks on the daily chart. There was no bearish confirmation in the first place, and you do not want to bet against it in the first place. The first place in the first move was a nice gap close reversal here, right? And in terms of it already working, like I had mentioned, puts already worked yesterday. It already partially filled this gap here and partially filled this gap here, and puts already banked, and there was bearish confirmation here. So I played puts yesterday, made a 50% profit return. I advised, and I was very vocal about this within the live stream and also within the chat room, to not play puts today. I said the trend is calls on dips. Do not bet against the gap close reversal strategy. SPY had a bullish gap close reversal, and then once this gap filled right here at 391.50, I made it very clear there's no bearish confirmation. There is no reason for puts. It's breaking out. It's forming support. It's turning this white line into a support level. And if you look at the trend, calls on dips is where the money was to be made today, right? I made this all very clear and vocal within the chat room, written out and also posted on live stream. As I stated very early at 11:20 a.m., as long as SPY maintains above 391.50, we will see 393 plus today. The trend is bullish. Puts are not ideal. And then I also had stated, I'm calling it for the day. I nailed calls at the bottom, the gap at 388.64 on stream. I'm done. I'm calling it for the day, up $1,000. And then from there, I had stated that right here at 1:18 p.m., I had stated that the only level that I would consider puts is 396.50 to 397. That's not the best setup at the best price, but that would be a key level where we could see a small pullback, right? And then I clearly stated that bulls win. And like I said, within the chat room, I made it very, very clear when SPY filled this gap, there was no reason for puts because it had a breakout confirmation. It was oversold on the daily. It had the bullish pattern on the daily. It already had a gap close reversal, and there was no bearish confirmation. If you look at the confirmations, there was literally no reason to be doing puts. Look at the 30-minute candle. This is a strong green 30-minute candle. Why would I buy a put option when SPY is reversing, closing the gap, literally forming bullish pins, breaking out, higher support, previous resistance is support? Why would I buy a put into a strong bullish 30-minute candle when it's already having a gap close reversal and oversold on the daily? When puts already worked at this level into the close yesterday and absolutely banked? When puts were up thousands of percents for the past 2 days? Why would I do that? So if you are red on the day playing put options, you genuinely deserve it. I completely understand. I was saying that there was potential level for puts. There was no confirmations. And in terms of what made me extremely against puts, is because it filled the gap and it had a reversal. And also when it filled this gap, it reacted bullish. You cannot underestimate the bulls. This is what's going to occur. They're going to come back and they're going to wreck the bears. I was laughing at bears the entire day because I said they are literally betting against my strategy. It had a gap close reversal. And I understand there's a gap to fill right here, but it's still oversold. It may be the best setup, gap close reversals, but it's not at the best price. And I was very vocal about that. It's a setup, but it's not the best price. It's the lowest, worst level. And it was a combination for a disaster for puts because it had a gap close reversal in the morning. That's what sold me on the idea to not play puts. But also, the bullish trend reversal candlestick. Look at this, man. Just be visual. Visually look at the charts. How does SPY react? You have this big red candle here. You have this big red candle here. You have this trend reversal candle right here. You have this trend reversal candle right here. There's a gap to fill above. There's a gap to fill above. It explodes up above the gap and keeps pushing higher. It explodes up and fills the gap, keeps pushing higher. Isn't it interesting how history tends to repeat itself? And you can visually learn how to trade by just visually understanding pattern recognition, by capturing these trends, by understanding what this candlestick looks like at the specific support or resistance level and how it reacts to those trend reversals, right? You don't even need to read books, or you just need to study the charts. The charts are going to give you the answers to the test, right? This was all very predictable and this was great price action in terms of my strategy. So those are the reasons why I did not play puts in terms of, why didn't you just keep buying calls, riding the trend and buying dips? Because that's just price action. In terms of my strategy and what I teach, gap close reversal. That's the play. Right here, there was no reason for a reversal and I didn't want to chase it. So I called it. That's the game, man. I could sit here and trade price action all day. On stream, I was literally telling people, if you want to buy calls and you want to chase, it just had a nice breakout above 390 and it went to 391. So if it instantly pulls back to 390 with a nice little micro pullback, you're going to want to buy the dip. And that was the exact bottom. And you could have done that trend the entire day. Right here, it has a nice breakout above the gap at 391.50. If it has a nice breakout, goes to 392.50 and then drops $1 back to the gap, you're going to want to be buying calls because calls on those $1 dips have been printing, right? But that's just price action. I'm looking to trade the best sets, the best prices, and I'm trying to teach people what the best thing to possibly do is, right? I could have sat here and scalped calls on dips all day and trade price action, would have done very, very well. But in terms of the one single trade that I made today was the best trade that you could have made on calls. I bought it at the exact low, and that's what I'm here to do for you. I'm here to trade. I'm here to show you how to trade the best steps at the best prices. I'm here to give you the price action analysis, and then you can use that information in terms of how you wanted to use that information. Like I said, man, if you played puts, you don't understand the strategy, man. People think this is as simple as just watching a quick trading plan video. There's so much to learn. Within Trader Society, there's over 100 hours of content within the video lesson library. You get a live trading stream every single day. I assisted members and I led them in the right direction for the entire day. And this was a phenomenal day for trading calls. So if you stuck with the trend and if you recognize that there was no bearish confirmations at any of our levels, and I made it very clear, this may be a good setup, but it's not the best price. It's the lowest level possible. And then in terms of 393 and 396, those aren't the best setups. Those are just key levels. It's not like this some sort of amazing setup. It's just trying to short previous support at resistance, right? But just make this a lesson. The one thing that you can take away from this video is if the stock is having a gap close reversal, it's going to have a strong reversal for the entire day. This is why if you watch that live trading video that I posted towards the end, I said the bulls are going to try to break above 392 and pump to 393, and they're going to try to go super bullish today and close this strong because that's the trend. So if there's one thing I can really help you in terms of this video, in terms of one thing to write down, when a stock is having a gap close reversal, do not bet against the side of the reversal. So if SPY is having a reversal here at the gap, do not bet against it. Do not buy puts. I understand if it fills this gap right here, it could have a reversal, but there was no confirmation. It instantly had a breakout when it filled the gap, and it formed a floor at the gap after dropping $1 from the breakout price. Literally no reason for puts, man. No reason. If you bought puts today, it's literally you just being incompetent in terms of what I teach and train the best tips, the best prices. There's so much more to learn. So that's my price action analysis update. If you do want to get involved with my organization of Trader Society, that's going to be the first link down below in the description. I will help coach you and lead you in the right direction and show you exactly how to trade the best setups at the best prices. Now, in terms of a quick update on the SPY, what I want you to understand is this. Based off of that trend that I showed you, we are due for a move a little bit higher. It's not done quite yet, it looks like. We're going to go a little bit higher, and then we're due for a pullback, right? So in terms of some things that I'm seeing, we have a very nice green, strong, bullish candlestick. Right here, we have a very nice green, strong, bullish candlestick. Look at this, man. Look at this pattern, man. These patterns are so on point. Trend reversal middle, it drops. Trend reversal middle candle. Look at this, same thing. SPY drops right here. There's a gap to fill above. Trend reversal, middle candlestick, call it whatever the fuck you want to call it. It doesn't matter, man. Just understand what it does. It's at support. Trend reversal candlestick in the middle. It explodes up, fills the gap, closes strong at the highs. Same thing today, man. Same. Study the history of SPY. It does that over and over again. Same candlestick right here. It explodes up. It's crazy how that works at support, right? So then what does it do the next day? Next day it goes a little bit higher, then it starts to sell off. So based on what I'm seeing, it's not done yet. And we're going to go a little bit higher, and then we're going to look for a potential sell-off because we're in a macro bear market. That's the reason why. So in terms of next week, I'm going to give you more key levels and more key analysis when futures come out on Sunday. But in terms of right now, this is what I have to say. We're due for a micro pullback. There's still a little bit more micro upside. Here is my 2 key levels as of now. My first key level is going to be $397. So this right here, this is a strong support level at $397. When it cracked and reacted as a resistance on this 30-minute bearish candlestick, it sold off very, very hard and triggered a massive crash. So when the SPY retests that 397 and reacts as a resistance level, you're going to want to look to play puts if you're seeing a strong bearish confirmation on 5-minute, even better on the 30-minute chart. That is not the best setup at the best price. That would be shorting previous support reacting as a resistance level. So what did we have? We had an overreaction to the downside. We had a gap close reversal. It filled this gap, did not react bearish, continued to go higher, and now it's headed back to that previous support at 397, which triggered that massive sell-off, right? So the first time and the initial reaction should be a micro pullback at $397 because the bears just got destroyed. And if you got destroyed, now you're not going to be as confident and put yourself in that situation to take advantage of puts at 397 like my team and I. So that's the game, man. This is a competition, and you must put yourself in competent trades, and you must get stopped out very, very quickly. I made it very, very clear. Like, so I'm buying calls right here at the lows. If it goes under the previous closing price, I get stopped out. If I'm playing puts right here at 391.50, if it goes to 392, 392.30, I get stopped out. I don't hold. If it cannot work at these levels, you will get destroyed. This is the game, man. I'm giving you the best potential level. If I'm buying puts at 397 and it goes to 398, I'm stopped out. I don't hold. If it cannot work at the best level possible, it's not going to work. If I'm buying puts right here at 400 and it goes to 401, I'm getting stopped out. I don't play, man. I don't hold and hope and lose. I'm a scalper. I get in, I get out. I don't care that I sold my calls 500% plus too soon. That's not how I got to where the position that I'm in. I've got to a position where I'm a successful trader and self-sufficient because I figured out a strategy that works and I stick to that one simple strategy. I get in, I get out very, very quickly. I cut my losses quickly. The win rate is above 70%, and I'm using one simple trading strategy that works. I'm aligning myself with something that is consistently working, and I'm disciplined enough to do it over and over again. And the key is to not only find that one thing that works, but to compound it. I don't care if I sell too soon. I don't care. I cut my losses extremely quickly. I can afford to sell too soon. If you don't cut your losses quickly, then yeah, you better be holding and hoping and trying to win big, but you'll give it all back anyways because you don't take your profits, man. You have to compound your account. Settling for mastering one simple trading strategy while compounding your account is what's going to develop your edge and lead to success. Mastering that one strategy. That is true competence, right? Become the best at one thing and compound that one thing. That is what's going to lead to your results. It's not going to be a bunch of random levels. It's not going to be a bunch of random trades. It's not going to be a bunch of different trading strategies. It's going to be mastering one simple trading strategy, and then you compound that strategy, and then you're going to see it's going to scale over the next year to crazy results. I have one guy who did this in the chat, and he's having 6-figure months now. With that being said, this has been a phenomenal trading week in terms of my levels of interest. Not the best setup, but it is an ideal price. $397 for puts. If there's a bearish confirmation, some people don't seem to understand that. You can't just play levels. You have to use confirmations. You can't just blindly play at some sort of level. But 397 puts if there's a bearish confirmation. So one thing I will say is it's not the best setup. So if it's not the best setup, I'm going to need a good confirmation. I'm going to need a strong pattern on a 30-minute chart or a very strong pattern on daily. I'm going to need a very, very strong pattern that typically will not form, but I am interested at 397 for puts with a max risk of like 398. Now, another key level that I'm going to keep an eye on is 395.88, the new previous closing price. It's towards the higher end of the channel. That's relevant and that's make or break. Based off what we're seeing, we're due for a small move to the upside and then a pullback. I'm going to leave it off at that. So look, man, you have two choices. You can learn and study over the weekend and become better, or you can just go out and party or do whatever it is that you want to do entertainment-wise. I would really encourage you to use this weekend and to study your time. And if you do want to join Trader Society, it is the best time to join. It's a one-time fee. It's lifetime access. This is the lowest the price will ever be. You get access to the chat room. You get access to my real-time trade analysis, the real-time trade alerts, the key levels, the confirmations. You can ask me any question you like about stocks or whatever it is about trading. You also get access to the live trading streams, where you also get access to the recordings of those live streams, right? You also get access to the real-time Discord voice channel where I give my commentary in real time, no stream delays. It's real-time, 100% voice commentary. And there's a lot more to it. So if you want to surround yourself with the right network, the right team, trading the best setups, the best prices, mastering that one simple gap trading strategy, this would be the place to do it. What I'm doing is I am building a tribe, a community who is dedicated to mastering one simple trading strategy and who is dedicated to compounding their account. Once you compound your account and it hits the upper 5 figures to 6 figure range, then it starts to make sense to start giving yourself a weekly paycheck, but you still want to compound your account, especially if you want to get to a higher level of 7 figures. With that being said, if that's what you're trying to do and surround yourself with that team who's dedicated to that one simple trading strategy where we'll look to trade it about 5 times a week, 20 trades a week, then this would be the right group for you. With that being said, guys, I'm signing off. The link to join is the first link below in the description.